Hello. Yes, so it's another video. Um, Maybe wondering why the 75 one is selling. But if you have watched my previous video, which I posted 3 days ago on the market review, you will understand why market or this particular asset is selling. Okay, because I gave all the reasons why I think even though we are seeing a bullish move, all right, we are most likely to see price sell to the downside. In case you missed that video, you can watch it. Or in case you missed the message I sent in there, you can rewatch it. Now, this is just a follow-up or an update on how market has been performing, even this assets VIX volatility 75 one S. You can see the name of the asset at the bottom here. All right, so let's go straight to the video. Previously, I told us why market was buying because I said it was because of this support level which price was refusing to break, and we had the market breaking to the upside here with that strong bullish momentum. Okay, so um markets right from that month was strongly bullish. We have a strong bullish candle. This was the month of July, and this is the month of August. At the time I was doing the previous review, this candle was still bullish. It was trading at this high. Okay. But one thing I remember telling you was that even though market has switched bullish from this downtrend here, a low breaking this low, lower high, lower low, lower high, lower low, and then a range and breaking out of the range. I told us that even though market is bullish, but I'll be very careful with the buys. Why? Because if you know about CRT, I told you about the fact that not necessarily about CRT. I told you that this was the previous month's candle, and when a new month candle opens and is trading above in the bullish, a bearish case scenario, when we're expecting a sell, when the bullish new month candle opens and is trading above previous month's candle high, you've got to watch out because anytime market can switch bearish. Why? Because it is assumed that there is liquidity on top of that high and below of that low. So once price has decided to take out the buy side liquidity first, the upside liquidity, it may definitely target the downside. All right. But let me add this that I won't be surprised to see this monthly candle become something like a doji, okay, so that it will give us a CRT candle formation where we'll be looking forward to trade next month's candle to the downside, okay, to the downside. Just as we can see on the 75, we may go there in a short time. Now, market is now rejecting the highs and is selling down. So as soon as you spot the rejection on the monthly, you go to our weekly time frame to investigate why price is what selling. Now we can tell that price had traded into this key level which has been used previously. That is an A-shaped key level which market has used several or previously, and price was also trading around that region. Okay. Now, going down to our daily time frame, of course, I told us that even though market was buying in my previous video where I was doing the market review, though market was buying, but it was struggling to buy up, right? And here we had a consolidation around here. Now, we are seeing a strong bearish move to the downside. So we are going to follow that bearish bias, okay, for a while, at least to this key level, possibly, okay, this fresh key level. Now, we have had a daily sweep of liquidity above here, and I'll be removing some of the lines. I want a clean chart. Okay. And then we are getting a daily breakout here. This is a very strong bearish signal at the early stage. Okay. At the early stage. So the next area that we are going to look out for a sell continuation, maybe this open close level, which we would want to see price trade into and give us some rejection so that we can sell more down towards the downside here. All right. So going down to H4, we can see that market has shifted structure from bullish to bearish after this sweep of liquidity here. Market has given us what? A break, a 4-hour breakout right here or right there. So you either use this or you use that. But I'm going to use this one right here since it's almost in line with that of the daily. So we have switched bearish. Now a range has been created from this high to this low. So I would expect price to at least retrace into this level, that is the 62% level, or the 78% level, or the 79% level. Any of these levels here can be used to continue the sell. Given the fact that we also have this area key level right there. Okay. Now on our 1 hour time frame, you can see that those who were following price movement very well could have had some entries. Why? Because after the sweep of liquidity, market gave us a market structure shift, or price gave us a market structure shift right here, even on the 15 minutes. Okay. It's clearer on the 15 minutes. So we switch from being bullish to being bearish after trading above the previous month's high. Okay, this 15 minutes has even switched bearish. So once we have that bearish structure, this area is an area for a sell from this side to this low. Market could sell from the 79, 70, or the 62% level. We could see that that is exactly where price started selling from. So you could put your entry there, your stop loss right at the high, and then go for at least this low. Okay. But price has sold all the way down to almost the 7,000 level here, which was quite a massive sell. So if you missed out on this trade, actually I couldn't really trade it because it happened behind me, but I came to check to see. I saw that I could have used this entry to catch a trade. So you can follow the sell trend even on 75 1S until the trend begins to give us an indication that it wants to shift to the other side. Okay. So let's check 75, this 75, this 75, or volatility 75 as well. On the monthly time frame, you could remember I told us to watch out for candle three to sell. Okay. Let me remove everything. So in our previous review, I told us how that price had broken out of this W shape. The neckline has been broken. Okay. The neckline has been broken, as we can see here. This level was broken by this candle. Now, after the break, what did price do? Price has traded into a bearish fair value gap, which has never been mitigated. Okay. So this is possible area where market could reverse to the downside from. So after tapping into that area, price has created what a CRT candle for us. So we have this candle's high and then its low as our range. Now, if you do CRT trading, then we are looking forward to sell candle three. So as candle three opened, which is the new month, today is the 8th day, markets try to go up. And you know that it is just attempting to mitigate this week. Okay, so sometimes what you can do is that you use your fib. You use your fib and then you mark from the body of the rejection candle to the high. So the 50% level here is where you can look to sell from. And you could see that when price traded right up there, it started what? Rejecting to the downside. Now, I told us to be very watchful of this area because when price trades below this low, it will also be tapping into a fresh bullish fair value gap. And we should be ready for a reaction. Okay. So you're not going to hold your trade all the way down to the CRT low. At least one of the rules states that 50% of the range is guaranteed. So from the range high to the range low, where is your 50%? This area is actually our 50%. Our 50%. If you're able to catch the sell from the top here, then you can hold. But when you catch it somewhere around here, it will not be appropriate for you to hold because the reaction from the fair value gap can be crazy. All right. So just let's go to the weekly time frame. And I have so many lines. Let me remove some. So this was when price traded into the 50% level, and that level corresponds with what? This open close level. So we have a weekly rejecting weekly right there and turning bearish, which is our Malaysian support and resistance or key level. So if you know about Malaysian support and resistance trading, I think that is a key level. That is a key level. Open close, all right. There are several key levels. You can talk about the A shape, the V shape, and then the open close. So this kind of open at the high here, traded up, traded down, and close here. So the closing price became the opening price for this kind of. So the intersection, the opening and the closing price, that is the key level I'm talking about. And you can see that this candle's high served as a liquidity to be grabbed whilst price went into that zone on the weekly time frame. So let's go to our daily time frame. So we are framing a bearish bias. Okay. As soon as price took that liquidity, when it are traded into the 50% of the week. Can also see from the left side that we did a liquidity sweep here, and price gave us change of character or a break to the downside right here. So market has become what? Bearish. Price has become bearish. So we are looking for what? Only sell trades. So let's go down to our 4-hour time frame to see whether we will be getting some entries on our 4-hour. So on our 4-hour, you can see price has been what? Trading from the downside up, created this low, and then broke above that high. And we came back inside. So this was a liquidity grab from this level, and price has traded lower. So we have a trading range from this high to this low, and we expect price to give us at least a 61% or 62% retracement for a sell continuation. So market decides to sell below the 50% level, which may be a false signal. So we are waiting for market to give us that push back into this zone where you look for sell towards the downside. So if you miss this sell, don't worry, price may come back. It doesn't have to, but we are not going to chase price, okay? So let's leave it there and switch back to our 1 hour. Our 1 hour. So this 60% level or 61% level, the golden zone. What do we have here? We have this liquidity, and we have that liquidity as well. And on top of that, you have this breaker block or mitigation block, if you like, also, which is not touched. It's so fresh. Now, the low here also was support, which was broken, which can be retested as well to resistance. So I'm looking forward for price to do a run on these two highs, tap the zone, and continue selling. Until then, I'm going to sit on my hands and watch what price will do. Okay. So that is that for this 75. You can follow the sell even up to this low. And below this low here is our fair value gap, the opening. So when price gets here, we are going to look out for some bullish reactions, which may be scary. So I think that would be that for now. That will be that for now. So thank you so much. Make sure that you watch and watch again. If you have any question, you can type it in the comment section and I will reply to you. Now, there are going to be more videos coming up. So just keep watching out for this channel and we are going to be super blessed. We are going to be super blessed. So that is that. If you are supply and demand trader, this is a very strong area of supply because this wholesale was initiated from this zone. So if later market decides to come back there, then that is going to be a very good area for sellers to drop price one more time. And even the fact that we have this little pullback around there, which will serve as what? A fuel or liquidity for markets to use for dropping. So you can save this. You can save this. for your use in the future. For your use in the future. All right, thank you. Bye-bye.